you guys did some fun stuff with your family this morning. I know we did a nice little Easter egg hunt with the kids, and yeah, it's always a good time, especially once you have kids. If you guys don't have kids, I'm sure you still find other things to do, but so gonna start live. We'll get into the ideas and stuff in 1 minute, but real quick, guys, if you could just go retweet the tweet that I sent out letting people know we're live, or share it on Instagram or anywhere else where you might have followers that don't know about this. We're just trying to get as many people to participate in the live versions of this as possible. Obviously, I don't expect a huge turnout today because it's Easter, but that's on we're trying to grow this, trying to get more eyes on it, and trying to help more people, because that's the whole point of this, is just to try to teach you guys how to see the markets in a way where you can create your own Sunday preps, your own Monday preps, your own Tuesday preps, right? It's all about self-sustainability. I don't want you guys to copy my ideas. I want you guys to learn how to think like a trader. All right, it's 2 o'clock. So housekeeping as always, guys. If you are looking for a broker that can be trusted for whatever your needs may be, I mean, you guys know that I trade a lot of small caps, and these guys are great for locates, and it's just an amazing broker. But I trade a lot of large caps as well. If you guys want to check out Cobra, there's a link in the description. 25% off all your commissions. That adds up, guys. 25% off commissions at the end of the year can be quite a bit. Also, the first month of your platform free. So if you want to check them out, and like I said, guys, I've used all the brokers in the business. These are the only ones that I'll promote. I still have brokers at accounts at a lot of other brokerages. Cobra's my everyday. This is my my hot rod, the only thing I drive. So other than them, Spike Key. These guys are getting ready to launch a new platform. They've been trying to upgrade their back end, and it's really, the stuff they've been working on is amazing. But if you guys don't understand what they do, they create a product that allows you to pull historical stock data in order to back test theories you may have about a possible edge that exists in the market. I used to do this manually, tracking data by hand with an Excel sheet every single day. These guys launched this product. It literally made what used to take me hours take seconds. And it also gives you the ability to come up with new ideas all the time and be able to go and pull that data in a heartbeat, instead of having to wait months and months and months to collect this data, right? So check these guys out. And of course, Scripts to Trade, guys. If you don't know about these guys, they write custom scripts for Thinkorswim and TradingView. Whatever kind of indicator you can dream up. They also have a whole suite of pre-made indicators that they have created, things based around volume, such as volume forecasts or abnormal volume scanners, gap scanners. So if you guys trade a lot of small caps and you don't know the data on these stocks and how they typically behave when they gap up, you're already at a disadvantage to all the people that do have that data at their fingertips. These guys have created that. VWAP Boulevard, another very neat indicator that they help bring to life. It was an idea of 80 all-day faders, a good friend of mine on Twitter, and because that guy is all about giving back, these guys made the script and they agreed to make it free for everybody. So if you've never had a Scripts to Trade indicator, they have a free one. Just go over to their site and you can get the VWAP Boulevard indicator, which you probably see on my charts from week to week. Really cool. And I've got news with them soon. I'm going to just tease you guys. There is something we're working on together, so in the near future, you'll be hearing a lot more about that, guys. And as always, this is one of my favorite times of the year, or the quarter, which is the new earnings are starting to roll out. And this is the first week where some bigger names are going to report. You got Netflix, Tesla, IBM, Snapchat. So earnings always make the market, for the way I trade, the best, right? When earnings taper off, I tend to be like, oh, please bring earnings back. So we're getting there, guys, and that I couldn't be more excited. And last but not least, I'd be an idiot to not inform you guys, there is an Easter sale for True Trader. $200 off, whether you want to use it on a monthly plan or a yearly plan. There's your code right there, Easter 2022. It ends at the end of April, ends on April 20th. So if you guys are on the fence and not sure about wanting to spend the full price, here's your chance to get it at a discount. Guys, I would like to think that, you know, we provide a lot of value, way more than what the subscription fee is. So like, I obviously I'm biased, but if you ask anybody that's a member of TrueShare or been around TrueShare for a while, I'm pretty sure they'll tell you the same thing. So if you guys want, take advantage of that. Of course, we also have the 5-day trial, which I think is $30. 5 days. You know, you have access to the room, the webinars, the masterclass, like everything. You guys, $30 is literally the only reason it's $30 is to keep people from just continuously using a new email and signing up, right? So before we get into the prep, you know, people tend to like these chart reviews from trades from last week. There was the one trade that I took that was from the Sunday prep last week. I tweeted about it live as the trade was unfolding. So like if you follow me on Twitter and you're not in TrueShare, you still could have participated in this trade. It was discussed last Sunday, and that was the Walmart trade. So let me real fast mute my mic so that it doesn't have this echo feedback, and I'll show you guys the idea from last week, and then I'll show you guys the charts and how I actually executed. Remember, it's retail. Retail looks like trash. Walmart and Target ripped last week. You could probably apply whatever I'm about to say to Walmart. You can probably apply it to Target too, but Walmart, I'm looking to fade. I'd like to see it higher. The higher the better. 160 is the first area I'm interested. And trust me, going fine. There's not too many times where you see Walmart get this extended from the 20-day and it doesn't have a big slam back to the 20-day. It needs to find balance. And like the chart shows you the blueprint. Okay, so here we are. It's like we already have the answers to the quiz. Just answer the question the way you're told to answer it, guys. When the stock gets this extended from the 20-day, what the hell happens? It snaps back to the 20-day. So can it go higher? Yes, I'm praying it goes higher. But when this thing is ready, that's a big fade, guys. All right, so yes, traded the Walmart. It did not get as high as I would have liked it. But as I said in that clip, right, like the higher the better. But that doesn't mean we need to find a top. And let's see if I can find, where is my picture of, here's the entry. Okay, so this is the chart of the entry, as well as you guys can see the first covers actually came the same day. It gave a clean fade. And hopefully from this chart you can see that, you know, we didn't guess a top. We literally waited for this thing to kind of make a first lower low first, and then make a lower high on that initial shove up, and then we put our entry on. We had very defined risk. The entry, I believe, was just a little higher than 157, and the risk was over 158.50 pretty much. So about $1.50 a risk, but you can see same day closing out a third of the position, I think, for what was that, 3 points or something. So like the risk reward, this is what we mean when we talk about asymmetric, right? So here was the second exit, was another point lower, and we'll get into the actual chart as well so you can see why these levels were covers, if you can't already tell. But and then obviously closed out the trade for the last third, was actually took a small loss on the last third, but overall an extremely green trade and extremely headache free. And you know, if you guys have been paying attention to these Sunday preps, that's from the overbought reversion setup section, right? There's that, and there's the oversold reversions. And like, to be honest with you guys, those are my favorite trades, because as far as asymmetric trades go, those are the most asymmetric. The ones that just go para on the daily, and you know, when they do finally roll over, we're not in the trade for 50 cents, $1, $1.50. Like, we're looking for bigger moves, and you know, the risk is usually very, very defined. In fact, let me pull up the Walmart chart, guys. You can see these purple lines here that I guess they're pink. The pink lines that I've drawn across are exactly where those covers were. So even though the 20-day was the final target, you have to be, you know, extremely thick in the skull to like not want to be taking some off at these very important spots, and not, you know, understanding there's a very good chance that these levels give bounces, right? So you got to lock in at spots that are logical and rational. And also, I mean, the chart does kind of show you a lot of times where we get extended from the 20-day And when it starts to roll over, it doesn't quite get back there yet. It goes and makes new highs, stops everyone out, and then goes, right? Did it here? New high, roll over. Over here, new high, rolled over. So it very well may be doing that again, right? We obviously we haven't made new highs yet, but I have rules about trailing stops when I'm in a swing trade like this, and I've already locked in a lot of it. I'm not going to let this thing go a few points against me just in the hopes of it does come back in and we get our final target. So it may end up making this newer high, and it may end up rolling back over and going back to the 20-day. But the trade's over. The trade worked, and the reason we go over these, right, is so you guys can see how to manage the trade. And I've talked about this a lot, guys. The importance of entries are not really all there is to it, right? So like whether it's me or Goose doing the midweek watch or the Sunday prep, and I ask you guys like, where do you think I'm looking at to buy or sell this stock? Most of you guys, without fail, are able to nail those entries almost to the penny. You know exactly what we're looking for. But yet, does that mean that you're going to execute the trade and make the money that the same way that I or Goose may make? Probably not, because there's so much more to a trade than just the entry. Okay, position sizing, targets, how to trail, where your risk should be placed, and things like that are just as, if not more important than the actual entry itself. So that's why I kind of been doing these trade reviews, is hopefully you guys see a little more behind the scenes and not just like the front facing, here's the entry, here's what I want. Okay, so we're gonna get right into ideas. Wait, I think, yes we are. Okay, just had to make sure. Let's do the disclaimer real quick and then we'll jump into that, guys. As always, neither I, True Trader, or any of our affiliates are licensed as or registered as security broker dealers. I'm not a licensed financial advisor. Anything I talk about, guys, is for entertainment purposes only. It's not a solicitation to buy or sell any stocks. All right, so that being said, let's get into the broader market. Let me get the ES up. Oh, why didn't it change? There we go. We'll start with the monthly. Again, not going to be anything changed here other than where we had the close, because we have not started a new monthly candle yet. In fact, what's the date? The 17th. So 2 more weeks, I believe. So we have one more Sunday prep before we'll have a new monthly candle, right? But just looking at things, you know, we still have, obviously, I want to keep my opinion out of this as much as possible, but I will have to interject some of it at some points, right? I personally do think we are going lower, and we'll talk about why that's not even a big deal right now anyway, because it's not like we're going lower, or it's not like this is going to fall off a cliff and not have big bounces and rallies. We already just saw this big rally, right? But I do think we're going lower, but the thing is there's all types of different ways that a stock can get to go lower, and what it does prior to that. So I like the monthly chart just to get that zoomed out look. It does still show us that, like, when you really take a step back, the markets are still healthy and in an uptrend. But when you're talking about a monthly chart, not a lot of people trade off monthly charts, and you have to understand that what looks like maybe just a slight pullback on a monthly chart can feel like a roller coaster for the people that are trading something off a daily chart, or even a weekly, right? So let's get into the weekly. And I want to point out a few things, and that is levels of resistance and support that I base just off the weekly chart alone, right? So obviously you see this alert set right here up at 44. It's going to be before the level, right? The level is 4491.25. That's last week's highs. I have an alert set prior to that. I want to know if we push into last week's highs. Last week's highs are going to be an important level. Same with the prior week's lows, as well as the weekly 50. And you also have this descending weekly 20 SMA, which are going to converge pretty soon in the next week or so. And the tighter these two moving averages get, the more coiled price is getting, and it won't look like it on a weekly chart, but when you start to zoom into the daily charts and stuff, you'll start to see bases have to be forming in order for the 20 and the 50 day to start pinching like that. So typically when you get these kinds of moving averages converging on each other like this, you're typically getting a bit closer to a move in one direction or another, right? So Another thing I wanted to point out is, even though, well, actually, you know what? I'm going to say this for the NQ. I was going to say this about the ES. I'll say it for the NQ. I'll try to remember to come back to this thought. Let's just continue with our resistance and our support levels. All right. So Friday's highs are going to be my first level of resistance. Again, we don't know if we're going to gap up, gap down tomorrow. That doesn't matter to me. Wherever we open, if we were to gap up above Friday's highs, then the first level of resistance to me is going to be this 200-day last week's highs, the 20-day, a lot, and the weekly 20, right? You have all these things right up in here, and the quarterly pivot as well. So that's a very, very important level for me in the way I'm going to trade. You know, any kind of rip up into those levels, and I'm going to be looking for the short setups. If we were to get through there, obviously you have these highs up here. I mean, we'll just call it 45.90, 45.85 to 45.90. And then on the downside, we've got basically the trigger point from that last move up, which was this level here, 43. Again, forgive me, guys. I like to round just for the sake of keeping things simpler, but 43.20. Okay, so flush down to 43.20 is going to be where I first look for support if I was looking for the broader market to be coming in the levels where I would like to get long. Below that is going to be 42.60, and then below that is your monthly 20 and that quarterly pivot down there around 41.50. All right, so let's get into the NQ. And like I said, I had some things I wanted to talk about, and that is, let's look at the weekly here, is that even though I think we're going lower, you know, there's this concept about the way stocks move and the way things need to happen in order for moves to actually have the ability to be sustained. And that is, for an actual move of significance to happen to the downside, oftentimes you first must try to probe higher. And you need to understand what's actually happening behind the scenes that causes that to be true time and time again. And not just with the broader market, guys. This is very applicable to just individual equities as well. So what happens when we keep coming lower? You know, if something comes lower without a significant bounce, you know, eventually the selling dries up and eventually the buyers start to step in. Now, when we start to actually push higher, you start to get a lot of people that rush in like they thought they missed it. Oh God, the bottom's in, blah, blah, blah. And shorts start to squeeze out. And you kind of get a sentiment shift where, you know, at one point you had everybody on one side of the boat, everybody kind of short. And everybody rushes to the other side of the boat. That is what, you know, the way I kind of describe it is, you know, packing the cannon full of powder, because you needed a little more gas in the tank to actually be able to go lower. So sometimes first you have to go higher because you need that you need to go refill the gas tank. And that usually is what gives you the energy to then finally actually have a more significant move to the downside. And so, in fact, we were playing around in the True Trader chat last week, and I actually just drew up some. I just painted on. I literally used Microsoft Paint, guys. So these are different scenarios. The way I see that you could possibly have the NQ play out. And actually, let me go back to the NQ real quick and point one thing out. Remember what we talked about with the NQ not having had the higher low on the weekly chart yet, whereas the ES had. Do you guys remember this? The ES had the higher low followed by the higher high, which gave us the push higher. The NQ was missing that, right? So we very well may have it now on the NQ. So even if we come back above these levels up here, that's your very first long trigger on the weekly chart as far as the NQ is concerned. And remember what that can cause. If you get that break higher, that's what gives you the ability to be putting in that significant lower high on a monthly chart, which then can cause major problems if that eventually rolls over and heads to the downside. So that is what I wanted to point out, and that's why, you know, I was using, and you guys are probably laughing at me right now because I was using MS Paint, right? But I'll show you guys the three scenarios, the way I think things could play out, and it's okay because I don't care which of these scenarios present themselves. All I care about is that I know what could happen and I make plans for all of them. Okay, so here's the first one. As you can see, this is like the bull case, right? We make a higher low here, we break those highs, and then when we pull back, instead of rolling lower, we hold support, and the bull market may actually continue this way, right? This is what bulls would like to see happen. This is what they need to see happen for this market to actually gain its composure and head higher. So this is the next scenario I can picture. And this is, this is obviously bearish because we are rolling over here, but we did not probe higher first, right? So this is literally just a continuation to the downside, still making lower highs, still making lower lows. But this is the type of situation where if this is the one that plays out, I still think eventually we're going to have a few more really big face rippers of rallies, which, is more of a headache and kind of like it just kind of like prolongs what needs to happen first, right? So here's the last scenario, and this is the one that I'm kind of thinking might happen. This is what I talk about when I say first we need to go higher before we can actually go lower. And as you can see, this one actually triggers to the upside that higher low followed by the higher low followed by the higher high, which if this plays out on a weekly time frame the way I've drawn this, that's what's going to look like on the monthly chart, what I was trying to illustrate, where you get that lower high on the monthly chart and then come lower. And this is how the bear market could actually unfold. And I think that if this scenario plays out, we actually do go much lower. And this is like, this is what I think would happen if we were going to have a real bear market, like a sustained one. So if you study bear markets, like past bear markets, you need to start, when you do look at them, you need to go and look at monthly charts. And actually the NQ is not a good one. We'll look at NDX here because now I can look back further. But what I'm saying is, when you go and look at the significant bear markets, we had those big attempts higher. You see this big attempt higher here, and that was what set the backdrop for the big rollover. Again, here's your 2008, 2009. We had that big attempt to go back up, and it failed, and we rolled over, right? So we haven't had that yet. So even though I keep calling this, a correction, a bear market, I do believe that we eventually do go into a bear market that lasts a little bit longer than what people are typically used to, but we haven't had that rally yet, right? So that's what I'm saying is, I think we need to try to go higher first in order to get that. So let's get back to the game plan here. Again, last week's highs is going to be resistance. Actually, there's a level before that, but that's based off the daily chart. I'm going to use the weekly chart to illustrate some things real quick, right? You guys can see this significant level here from previously. It lines up pretty close with last week's lows, not last week's lows, 2 weeks ago's lows and last week's highs. That's a significant level for me, right? We'll just call it 14,380, 14,380. And then after that, we can jump into the daily chart. Let's go and look at this. Friday's highs in the 50-day, that's the first level that, as long as we don't gap over it on the open tomorrow, will be in play as resistance. So a big spike up into Friday's highs is going to be looking at some shorts. Again, that 14,380 level is going to be important. And then the underside of the 20-day, guys. Always, if you guys follow me for any amount of time, you're going to understand the 20-day or the 20 SMA plays a huge part in my trading on all time frames, okay? Above that, you have the quarterly and the weekly 20. I don't think we're going to get up there this week. I could be wrong. As always, when I say that, I say it fully well aware of the fact that anything can and does happen sometimes in the market, all right? And then up higher is going to be those significant levels, right? That any moves up there, the first attempts, I think, set up some really nice short setups. So on the downside, again, we're going to have, let's see, I've marked out 13,750. And, these are more ranges, right? Less so than they are written in stone to the penny levels. But we've had this level tested quite a few times to the underside and from above. So first test of that level is the first level I'm looking at for longs, and below that, then these significant recent lows. Into the Bitcoin crypto space we go. And so we lost this trend line last week. I don't think it was the most important thing to hold. It would have been nice for the bulls. I'm pretty sure they didn't like to lose it, but I feel like pops back into the underside of that is going to line up nice with the 20-day. That's going to be resistance. Also, your weekly 20s coming down and converging in that same level. Below that, you're going to have this 37,000 level, which is kind of this next little trend line. You see VWAP Boulevard there, and you have the quarterly pivot. Again, this long trigger that's set up on the weekly chart to get us out of this downtrend is not wrong. It's not a busted idea unless we lose the lows, okay? But you don't want to see something trigger to the upside and then just immediately get super weak, right? You'd like to see levels start to hold. So as far as like any sort of bullishness I have on the crypto space at all with Bitcoin, it's not there right now. Back when we triggered this, I was thinking, if we start holding some levels, this could get going. But the bulls need to do some work here to get their feet back under them. We're back right here into the monthly 20 as well. Let me check the monthly chart. Yeah, we're right into the monthly 20. Now, what does look good, you do keep making these higher lows on the monthly time frame. If you guys know anything about me, I don't consider these higher lows because we haven't broke the low of the previous, right? But you know what they are is they are higher lows on a weekly time frame, which is what we kind of illustrated, right, with these. There's plenty of levels below they can hold, but the bulls need to start holding them. You don't want to just fall through each level sequentially without any serious fight or putting up any sort of battle at these levels. I think if we come under, it's not last week's lows, I don't think, April 11th's lows. If we come under that, I think we're going to go test 37K. I'm really, really interested to see, do the bulls step up and defend that level, because they need to start finding their nuts. All right, so sector analysis, guys. Let's go into the bar charts. See, energy, obviously. Energy's been standing out. Energy and oil both still look healthy. They're still trending. I don't know if you guys saw Natty Gas. Natty Gas is going parabolic. The tech sector getting pretty decimated, right? They had the biggest downside week last week out of all the sectors, followed by communication services, which is the one we keep talking about. As far as, remember, they were the ones that decided to go and start their bear market on their own, and kind of led the way. Healthcare had that big pullback, but remember, healthcare was looking really good. So as always, I want you guys to keep in mind that when I look at these sectors on bar chart, it's very important to go check out the ETFs that follow with them, right? And so I'm still doing what I did last week, which is I made notes about the sectors I would be willing to put money to work on the long side and ones I'd be more short bias on. So I'll just do it that way, right? So healthcare, XLV, is the first one I'm still bullish on. Why? Because it got extended. It's been in a nice uptrend, but it pulled back to support right to the 20-day, right? And if you guys remember the CVS idea, the reason we thought CVS may be a near-term short was because healthcare in general was getting extended, and so was that. But it looks healthy. We've pulled back to support. If it can hold here, it can make another push. So that's why I'm bullish on that sector. XLK, tech, and I made a note. I'm bullish on this if it can come lower first, okay? I do not like it right here. We closed on lows for the week. Again, remember, tech got hammered, right? Tech was down 5% as a sector. But you have the monthly 20 right here. Plus you have these recent significant lows around 143, 142. I think if we flush out a little bit more, get a little bit of panic, I think there's going to be some names that are worth longs. But you guys, here's an important takeaway. When you're looking at these sectors, you should understand that if the idea on a sector is that it's oversold, which is kind of what I'm pointing, it's not oversold yet, but if it sells off some more, it will be, right? If I want to look for equities in that sector to trade, I either want to look, I kind of want to look for something that's going to take the same type of setup as the overall sector, right? What tech stocks are also oversold and selling off into some key levels? Those are what I'll be leaning towards, right? Let's see, what was the other? There's one, okay, made a note on this. Real estate. I don't typically trade this sector very much, but the sector looks good, and we have pulled back. We didn't get to the 20-day, but you got this nice little flag building up here, and the only reason I'm pointing it out is because, yes, there is a real estate name in my watch list this week, and we'll get into that when we get into the setups. So as far as short biases, retail still looks like trash. Let me pull up XRT. Oh, it's the top one right here. XRT, guys, this is, you know, we lost this trend here and we're pushing back up into resistance. And when we pushed up again, so far we've made a lower high. You can see I have this alert set right here. It's set at under 75.32, okay? Under 75.32, and this is an anticipation continuation short trigger. Basically, it's anticipation of this trigger. So we get under there, we should come down to this level, and if it loses that level, this chart begins to really look like it could unwind some more, right? We could go right back to the 52-week low. Is it 52-week down here? I think it is, yeah. This should be about 52-week lows around here. Really think that this chart could get ugly, and there's a lot of names in the sector that liquid, have range, so use that to make your plans. If you know, even if you don't want to short these stocks, maybe you should be like, oh well, if the sector can't find its footing, at the very least, hands off on the longs, right? XLF, the financial sector, I think it looks trash as well. This one I think could be getting a bit extended to the downside, but I think all pops back into resistance. There's a lot of names in that sector, again, liquid with range. Now keep in mind, the beginning portion of the earnings season is usually heavily loaded with the financials. The banks and all of them usually report first. Some of them reported last week. Some of them are reporting this week. So make sure if you trade an equity that's in the financial sector, make sure you know when their earnings are coming out, guys. XLP, which is your Staples. Yep. This one's extended. So again, just like when I was talking about tech being kind of oversold, this one's getting a bit overbought, right? So go and look in the sector, see what names are in that sector, see what names are liquid and have range. Are they also enticing? That's how we make plans. XLC, yep. This is very reminiscent of the retail sector chart. Losing levels, looking for spikes back up to be good short setups for anything in this sector. And I knew XLY was in there. I knew that's why I was mixing up Staples with Discretionary. Discretionary looks like trash, lower high. Now remember, Staples was extended, Discretionary not. That when you guys start to understand sectors and money rotation, that should start to also clue you in as to the overall health of the general market. Like some sectors don't do so well when we're not looking very healthy. Think about what consumer discretionary means, right? It's like you have discretion over that money. You use that money as a voting booth, right? What companies you would like to spend your money at. Well, if it's something that you don't need, it's not a necessity. When money gets tight, those are the kinds of companies that, typically suffer because us retail folks aren't out there spending our money, doing dumb stuff. Let's see, what was the other one? Oh, XOP, and I do have a note that XOP, I needed to go a little more para. This thing needs to speed up, but I think there'll be some names in that sector. If it flushes, I think it's still got a lot of names that look good for longs. And XLE, if XLE can push up into 84. And if you guys zoom out on XLE, you'll see 84 puts us right up into this level. It was a key level way back in 2015. And, I feel like the longer we hang out above these recent breakout levels, the more acceptance of those prices the market's telling you there is, and it may have another shove up. And I think we get that next shove up, there'll be some good setups for the shorts. So that's the whole sector analysis, and now we're just going to get right into the ideas. And like I said, I want to try to keep this a little bit short, so I'm going to fly through these as much as I can, and we'll get into the questions at the end. All right. So the first setup I'm looking at: strong stocks looking for continuation. These are all longs, guys. CAT. Now, CAT had a big Friday, right? Why would I want to be longing something that had a big Friday? Well, a lot of times when you get these big moves up, you get what we call a second day continuation play. And I really like this weekly chart, guys. This thing is just looking super healthy. When you get these breakdowns here, like you see this level that it lost. Let me draw a line here for you guys. When you see this level get lost and it snaps straight back up and now we're looking bullish again, it's kind of like what I talk about being a failed short setup, creating a really powerful long bias trigger. Getting these breakouts here too as well. I feel like this thing can go, and I want to make sure, you know, this chart has range, and it, you know, traded 5 million shares on Friday. As long as it stays liquid enough, the range is there. I'm looking to scoop this on, what did I write, 225. And let's see if we zoom in. Yeah, you can see these recent highs where you can just draw a line straight across. You see all these recent highs. Whoops, wrong button. Thinking a flush down into 225. Look for buyers to show up. Look for some higher lows and something to risk against. And see. And I want this to happen early, like right off the open. Just, you know, profit taking, a little bit of you know, scrambling, early weakness, opening flush 225, 224, somewhere in there. Watch for the buyers to show up. I'm looking to get in there and watch for it to break over Friday's high a day. If that happens, you could get a really big move on something like CAT. If it gaps up, the plans probably change, right? I don't know if it's going to gap up or not. Obviously, we have no crystal ball. If it gaps up, I'll probably still be interested, but I would not touch it unless it can close the gap first, right? Or, I don't know, depending on where to gap to. The very earliest I would touch it is if it comes back to previous day's high a day, so Friday's high a day. But I'd prefer it to kind of open flat, maybe a little bit up, and give us that 225 flush. So that's CAT. SPLK. Listen, I tweeted about this week, and I'm good friends with Jay Mintzmeyer, who is, as far as knowledge in the shipping sector goes, he's the main guy. Like, he knows all the shippers. He has a business that does an analysis on all these names. And, you know, I'm not the type of person to, you know, have somebody like him at my disposal and not ask a question first before I make these kinds of ideas. But I literally was like, dude, I tweeted out to him, I was like, man, this chart is gorgeous, right? Like, look at the increasing volume. This is a weekly chart. See this really long base built. We move up. We build another base, and we get this flag forming up here. And this looks ready to go, technically. But, you know, he was saying kind of what I feel, the same kind of thing I think about with oil and energy. And that is, like, typically when they look super bullish, it's when you got to sell, because that's when they roll over. But, you know, he agreed the chart looks good, but he's just saying, you know, a lot of what he thinks is there with SPLK on the fundamental side may be priced in. And for that reason, you know, the idea for me is probably not as bigger picture anymore. I'm still long bias on this, but I'm not looking for the home run or swing trade that I think I probably was prior to talking to him. And if you guys don't follow Jay Mintzmeyer, I think his Twitter handle is Mintzmeyer, @Mintzmeyer. If you go on my Twitter, you can find the tweet that he replied to where I tweeted out to him. He's a great follow, highly suggested, especially if you want to trade anything in the shipping sector. But the idea for me is I'm looking for major retraces of this move, right? We've just gone from 25 to 30. I would need to see the 20 to 50 days somewhere in this, like a 50% retrace before at all being interested. And the lower the better, right? Like, I want as close to the lows as possible, so if I did put anything on for a swing, I know I got really asymmetric trade on my hands, and I'm okay with being wrong. But as far as day trades go, any kind of major flush down into the 20-day or the 50-day, and I may be looking to scoop this, but again, not a swing trade, at least for now. Thinking just day trade this. It's got, you know, almost a 2-point ATR. But I just really like this higher time frame chart. CVS, and I know people are like, God damn it, CVS again, Ricky. Yes, CVS again, Ricky, because this chart it behaves so well, right? We bought it down here, we sold it up into the pop. Actually, I sold it into the 20-day. I could have wrote it a lot higher. We called the short on it last week just because of the overextendedness. But if you remember, the healthcare sector is screaming pull back to support, and what has CVS done? It's pulled back to support. So I literally have notes 3 ways I will look to play this, guys. One of the things I did point out is I love the way it's just holding the weekly 20 here. This pullback is right to it. We've been trending. You see these yellow circles are both times when we just touched it to the T and bounced. Here we are there again. and I still think the chart is beautiful. Nice high and tight flag after a long-term, big old rounded bottom that built with the breakout. You know, we've been following this for a long time, but why stop trading something that's just an ATM, right? If something works all the time, don't go and try to change it. Just do what works, guys. So let's get into the idea. Said if it continues to hold the weekly 20 SMA, I'm going to look to get long with risk under last week's lows. You can see, you know, these lows have been holding, right? So anywhere in this area, if it starts to hold and we start to get something to risk against, I'll be looking to get long against last week's lows. If we lose the weekly 20, I've got no problem in revisiting this down around 100 and around these recent lows and looking for that psychological round number to be the play. Again, this thing can often produce a double, like a twofer, right? A swing and a day trade all coupled into one. Just got to get that entry right and at least just leave a piece on if we close strong and you're in the profits. And the other thing I might look to do is if this thing were to just start pushing and never give an entry, I will look to buy this just on dips. If it wants to have a trend day, I'll look to get long on dips with defying risk against the previous lows. So that's how I would play CVS. And yes, I do want to play CVS again this week. All right, and the last name in this section is VNQ, and this is that one that I was talking about, is the retail. And again, I like this little nice, it's just tightening up in here. Let's look at the weekly here. You guys can see we just reclaim the weekly 20, pull back, hold, make a higher low. And what I'm looking for is, you guys can see I have this alert set. If you guys look inside, you'll see what this is really based off. This is Friday's intraday 5-minute chart. I think if we break above that pivot from what was that, 2 p.m., like the 2 p.m. highs on VNQ, I will look to buy dips and get long. And yes, this is an ETF. I don't typically trade the ETF that often, but I like this chart and the way it's setting up. The other way I would look to play it is a flush against these lows. It's not, this is Wednesday and Thursday's kind of low area, right? So down around this 108 area, that's the other spot where I might look to scoop VNQ. And remember, the reason I'm even interested in this is just because the real estate sector in general looks pretty decent here. It may come lower. We may get the 20-day on XLRE. That's fine. That would probably be what it takes to put that VNQ down into that 108 area. All right, so the next section is oversold reversion setups. There's nothing that really has my interest this week. This one would be on my list, guys, but the liquidity. It's like it doesn't trade 2 million shares a day. But if you guys are looking to get long on a swing trade on something that has a pretty nice chart that's retesting a recent breakout area and the 20-day, I could see this being a nice trade. And I feel like, you know, maybe when it starts to turn, you get some higher lows and something to risk against. Again, I prefer it to be a little more liquid than this, but we'll see. Maybe the volume does pick up on it. Maybe they start to have some catalysts or headlines. If you guys don't know, this is Black Rifle Coffee. I'm not a fan of their coffee, but I like coffee. So that's the only thing I was looking at in that section at all. So now we're going to look at the short setups. Weak stocks, looking for continuation. AFRM, guys. I'm looking to short this into an emotional spike into 39.40. Now I know you see the annual pivot right there at 39.16. Again, guys, pivots are just kind of areas for me. I'd much rather test where we kept rejecting, right? Rejecting. Because you have to pay attention to the fact that even when it did stuff up there, sometimes it gets through a little bit and has to pull back, and look what happens. You know, you lose that level, you push back up into it, make a lower high, and then things can roll over. So I don't want to be early. I don't want to be shorting this at 39.16. We closed at 35. Let's check out the range. Yeah, $4 ATR. You know, I feel like this could pump and have one of those opening rips right into those levels, and I want to be there to fade this. 39.40 is where I will be on AFRM. Next idea, MS. These guys had earnings last week, and this is the candle it produced. You guys see this nasty sell-off on their numbers, even after a big gap up. A lot of guys in the room nailed this short on Friday. I missed it by pennies. You guys see the monthly pivot, and the 20-day right there is what it is. But I feel like if this thing were to go anywhere near Friday's high day tomorrow, I'm going to be all over that short. Actually, it wasn't Friday, right? It was Thursday. Ugh. Sorry. I keep calling it Friday. Hopefully you guys understand what I mean. I'm talking about Thursday's high days, right? Yeah, so any pop into Thursday's high day area, I'm looking to fade. If this rolls over and loses Thursday's lows, I will look to short a pop afterwards back towards Friday's low a day. There are other ways I play these trades, guys, so it's not just opening rips into levels, right? And if you're in TT, you know this already. One of my favorite setups is like a gap down, an opening flush, and then a spike back into where everybody got bagged the day before. So two ways to play MS, either Thursday's high day, kind of risking those highs, or a flush, opening flush, and then short the pop back into resistance. And when I do short that pop back into resistance, my target is low a day, for anybody that doesn't know. RCL, consumer discretionary. You guys think when a lot of people are feeling their pocketbooks getting smoked, that they're out there buying cruises? Look at this Thursday candle. Look at the way this thing has made a new lower high. This chart looks really weak. So I'm looking, what did I write? 84.80, which is going to put us right into those highs, right? Yep, and you had last week's weekly pivot right there, right? So pop into 84.80, I'm looking to fade. And again, just like MS, if we were to flush off the open, I'm looking to short the pop back into previous day's low, either previous day's low or previous day's closing price. So on something like this, it closed pretty close to the lows. I think MS did as well, right? Yeah. So previous day's low and previous day's close are going to be pretty close together, right? Which gives you two levels of confluence, right? You got a lot of people that are probably going to be like praying for price to come back to that level so they can bail from the position. So those are the ideas for the weak stocks looking for continuation. The last section is overbought reversion setups, which are my favorite, right? This is where the Walmart came from. This is where last week we had ABBV in this. You guys see what ABBV did? These are the setups that give you such asymmetric risk reward that they're my favorite, absolute favorite. EQT, first on my list. This is, you guys see the level up here, 44. Rip into 44. I'm looking for it to fail. I'm looking for lower highs. I'm looking for something to risk against, and I think this thing can come apart. You guys see where that level came from, right? You can draw it straight across. This thing has had a crazy move up, has had a few little pauses in the move, but last week just been so. And keep in mind, it's part of the energy sector, right? So understand what we said about XLE, where 84. I want XLE to rip into 84, and hopefully that would equate to a 44 plus push on this EQT. Looking to fade that. Next name, NUE, and this one's not there yet, right? I want 175 to 177 to get interested, but NUE, I think this thing could get extended. And last but not least, I just want to point out real quick that the natty gas has just gone straight parabolic, and I don't typically trade natty, but if you guys take a look at Boyle, this is an ETF. I may look to stalk this for a fade. I'm not going to get involved unless I see a clear blow off with clear failed follow through with lower highs setting in and something to risk against. But again, I like this one. It's not as liquid as some of the things I like to trade. 2.5 million shares traded on Friday or Thursday. I think it's liquid enough. And I think, you know, when I do trade these things that are lower liquidity, you understand that the way to combat that, to control your risk, is just to size down a little, right? You don't want to get caught in something with a lot of size that's not liquid. So that's the way I combat it, especially if you think a blow off is coming where you can have a swing trade on this. And I really do think this thing could be setting up for a swing trade. This is a 120-minute chart, and we're extended from the 120-minute 20. So any kind of blow off higher, and I feel like, you know, one, check this out. We could look at a 20-minute chart, and if we blow off from that, you know, we're going to have room back to the 20-minute 20, we're going to have room back to the 60-minute 20, we're going to have room back to the 120-minute 20, and we're going to have room back to the daily 20. So when we start to see those time frames domino over, that's when you can get those swing trades on and let them work, and that's what I'm looking for. So I'm going to quickly look at the questions, and we will see if there's anything I can add some value to here, and then we're gonna call it a week and get ready to spend the rest of my Easter with my family. Sunny D says Netflix and Roblox earnings on 4/19. Thoughts, bullish or bearish? Neither. So, you know, names like these will typically be like on watch heading into the week every week. But when I know they're reporting, I don't want to put any ideas out there. I mean, I know how to make a game plan for the earnings themselves. And if you guys haven't checked that out, I did a webinar on how I personally prepare to trade earnings plays. I'm sure Raul will show you the link to that in the YouTube chat. Now, if they gap down big, 300 on Netflix, right? 300 is that round psychological level. That would be where I look to possibly pick some up. I don't really want to catch a falling knife on a name like them when you see what happened on the last earnings, right? It went from 500 to, let's see, 4. So lost 100 points, right? So it could easily go from 340 to 3 and not stop at 3. Any spikes up into this 390, 400 area, that's the same concept, just on the opposite side, right? Psychological levels, levels of recent price history where we had rejections and pivots created. But again, like, not interested in trying to, one, I never ever play earnings as a binary event like a lottery ticket. I just don't. Unless, you know, you just want to spend $100 on a lottery ticket because you have a gambling itch. That's not what I do. I'm here to capitalize on edges, and that's it. If there's no edge, there's no trade. And Roblox, perpetual downtrend, nothing has changed here. I think, you know, gap up anywhere into those recent highs, that's the level to look to fade. If it gaps above those highs, then maybe a dip for a long. But you know, it has to show that it can hold those recent. It has to show that recent resistance can turn into support. I don't want. Here's another thing. Let's say Roblox gaps up to 56, 57. I don't want to just buy the flush into 52 or wherever these highs are, 53, and assume that it's going to be turned into support. I want to see it turn into support first, because look at MS. Like MS, you would have done the same thing, right? Gapped up, flush right into recent resistance, which people are hoping turned into support, and it just flushed right through it like nothing. Cut through it like butter. And you also have to keep in mind the backdrop. People are worried maybe there's a recession on the horizon. The bear market, you know, I've given you guys my opinion on it. I think we're going lower. I think maybe we need to go higher first. But when you have that kind of like uncertainty lingering in the market, what you often see is these earnings numbers come out and they'll look great. They beat top bottom, raise guidance, gaps up, and what happens? It just sells off because people are looking at it as their kind of like get out of jail free card. And guess what? Guess what stocks they're going to do that on? They're going to do that on the stocks that have been in these downtrends where everyone's bagged. So, you know, any kind of gap up on Roblox is a get out of jail free card for everybody that's been stuck in this thing. So keep that in mind. Tesla earnings, yeah, again, Sunny D, I'm not going to give you like bullish or bearish on the earnings. I have no idea. I just know how to trade them once the numbers come out and the market. Because, dude, I can't tell you how many times people think that like there's no way they don't beat. Like I remember one year when there was a lot of like people making a run to all the gun stores to purchase guns because people were I think it was like when, I don't remember what was happening a few years back, where whoever was in control of the politics at the time was, you know, basically talking about the right to bear arms, and people like shouldn't have as much freedom with that as. And guys, I'm not trying to make a political statement. I just remember tons of people were running out and buying guns, right? Because they were worried people were going to come for their guns. And I remember going, Smith & Wesson's probably going to just destroy it this year on earnings. And they did. And it still got sold off, right? So, like, it doesn't matter what you think. Your opinions really don't mean shit. What matters is what the market thinks. And so, like, if you think Tesla's going higher and all of a sudden it just, you know, numbers come out and they blow numbers away. They raise guidance. Everything's perfect. And it sells off. Don't sit there and fight it. You have to understand that the market is right, at least for now. Okay? Ray God, ABBV. ABBV I feel like is sold off to the point where, you know, and I mean Thursday it had the bounce, right? This was a bounce play. It's not, I have no interest in it now. Because now it's kind of right back to what we talked about last week, levels of balance, right? This was imbalance. Guess what? Sold off, sold off, sold off. Sold off so much that it found imbalance to the downside. And now it's back to a level where you're finding balance. So really no edge there for me at all, one way or the other. Hope that makes sense. KH is saying Kramer trashing AMD, saying let the CEO sue, buy back her shares before he recommends buying again. I got caught going long 96, got filled in the day Friday. Yeah, I can't. So that's the other thing, guys. Remember, I'm not a financial advisor. I'm not able to tell you what to do. Like, I can tell you what I would have done. I would never be in this stock if I bought this on Thursday and it lost Wednesday's lows or Tuesday's lows. I'm not still in it. I stop out. So the difference between me and people that have trouble consistently making money isn't that I'm good at making money. It's good that I'm good at losing quick. I'm good at stopping out. I've been trying to hammer that home with a lot of you guys that follow the Sunday Prep for a long time now, and that is, you'd be surprised how much more money you can make if you lose more often, but by doing so quicker and taking smaller losses. You can't be getting bagged and like, think about how often you take these trades where they go against you. You should have stopped out. It's not even the loss, but it's also the mental capital, and it's also your money is now tied up in that, and it's dead money, right? The sooner you take a loss, the sooner that money's free to go put to use in a better trade. So you guys got to learn how to be better losers. As much as that's, as funny as that may sound. Some of the thoughts on coin. I think it just lost all-time lows, right? I think it's going to flush out more. I think pops into recent levels are big shorts. Like I will probably look to short coin. It'll probably be on my watch tomorrow morning. It's not in the Sunday prep, but I will probably look to either short it up into 156 if it were to spike. You have to understand it closed 147, right? So I see the pivot there. I'm not really that interested in that pivot. I would probably take it at the annual, but I would probably short it against Wednesday's highs, which is at 156 level if it were to spike there. Oh, Ken in Miami, what's up, Kendall? Can you define more precisely what a blow off looks like specifically, and where you would be wrong? So like, I think one of the best ones was that Moderna one from last year, where it literally was like the best blow off ever. Didn't look like such a blow off on the daily, but this candle here, you see how Moderna had this giant move up, right? You have to understand that before this red candle formed, it actually did gap up and pushed higher, right? Now on an intraday, that really did have that blow off look, and then, you know, obviously what happened after was kind of what I try to show you guys is you need to expect. You need to expect that when we get this far of an imbalance, that price is going to be like an elastic and just get snapped back to that 20-day. You know, blow-offs are a lot easier to see. Like, I know everybody's watching this this week. Let's see if we can get back to the current time. Here we go. So, you know, this right here was a blow-off day where, let's see if I can do intraday for you guys. It's not going to show it quite as well. This is blow-off action. I think Vera is going to go higher this coming week, as much as most people don't want to hear that. You know, we're above all this volume that traded on the initial push-up. But if this a blow-off, it's just going to look very emotional. Ken in Miami, you're in True Trader. You know what a blow-off looks like because we look for them every single morning on those emotional parabolic squeezes. The problem is, I think what you want me to do is show you it on a daily chart. Tesla's had one. You'll see them on all the names where you just get these great, like this right here, this red candle. That's a blow-off candle. Now, did it continue lower? No. It caught people off guard, went higher, but then it eventually blew off again. That's what a blow-off candle looks like. This. Here, let's just go ahead and get rid of all that other previous action. That is a blow off candle. When you get this big old spike up and it just can't go any higher and it just blows off. What that really is shorts just tapping out and maybe some longs FOMOing in, and then it just once all the shorts squeeze out and there's nobody left to FOMO into the trade, there's no buying pressure left. That's what causes it. So hopefully that kind of illustrates that. All right, guys, that's it for this week. Happy Easter. I hope you guys all were able to take away something of value from this week's prep. I don't know why it's not changing back to my main. Oh, it is the main camera. It's just still got these NQ things up. Sorry. There we go. Wanted to wish you guys all a happy Easter. See you guys all first thing tomorrow morning at the market. Again, if you guys haven't tried out True Trader, I'm going to leave this up here as I send you guys off. $200 off whether you want monthly or annual. 5-day trials, $30. Check us out. You will not regret it. I promise you. Stay safe.